Warren is probably the best known investor in the world. His uncanny ability to read the market has helped him accumulate a wealth of $135 billion, placing him among the 10 wealthiest people on earth. He is the son of Howard Homan Buffett, a four-term Republican congressman for the state of Nebraska. His passion for finance was evident from the get-go. At age 11, Buffett bought his first stock, shares of Cities Service, at $38 each. The stock went down and Warren sold it, but it then rebounded and was worth more than the buying price. That made the precocious youngster very curious about understanding when to buy stock and when to sell it. The young Buffett started his own business, selling soda and magazines door to door. He also took his paper route very seriously. In 1944, he filed his first tax return as a 14-year-old and got a deduction totaling $35 for the bicycle and watch he used to deliver the newspaper. Smart how to become a young billionaire. A year later, Warren and his friends started operating pinball machines at local barbershops and sold the business for $1,200. In his senior yearbook, the caption beneath the photo is "Likes math, a future stockbroker." Indeed, he was so into that stuff that Warren wanted to go into finance right after school, but his U.S. representative father insisted that juniors go to college, and when he graduated from the University of Nebraska at age 19, he already had a savings account with $9,800 in savings. That is well over $100,000 in today's money. No student debt for Warren. Buffett attended Columbia Business School at Columbia University. In graduate school, he got a Master of Science in Economics. There he studied under his mentor Benjamin Graham. The professor was the brain behind value investing, which involves investing in stocks that appear to be trading for lower values than they are worth. It is the basis for many of the investment strategies that are still in use today. After school, he worked as a stockbroker in Omaha and taught a class on investment principles at the University of Nebraska, Omaha. But his dream was to work with Benjamin Graham, who turned him down for a job. However, Warren insisted and was finally hired in 1954 by his mentor's partnership, where he further developed his investing ideas. By this time, Buffett was espousing the concept of picking stocks with a wide margin of safety once investors considered the difference between current price and intrinsic value. In the meantime, he settled down with his wife, Susie Thompson, in Omaha, Nebraska. They had 3 kids there, and he still lives in the city, but the marriage was somewhat, let's say, unconventional. In 1977, Susie moved to San Francisco, although she remained married to Warren. She introduced her husband to Astrid Manx, who moved in with Warren and became his partner. The 3 sent Christmas cards together until Susie died in 2004. He then married Astrid. Hey, we don't judge. Whatever works. Buffett was now ready to strike out on his own. He started a partnership and soon ran several. By 1962, his investments made the 32-year-old a millionaire, back when that was a huge deal. Now that he was a millionaire, Buffett started making actual money moves. He united all his partnerships into Buffett Partnership Limited then. Warren began an aggressive takeover of Berkshire Hathaway, a company in Omaha, Nebraska. It was a textile company then, but he would transition it over the years into a multinational conglomerate holding company. Buffett ended up doing great things with this company, but he always insisted that getting into the textile business was his worst move ever. After 20 years of attempting to salvage that side of the company, Warren finally gave up. It was never going to work after all. This was when manufacturing left America and began to center on China and the Far East. However, the company was successful anyway because Buffett had turned it into a holding company. It enjoyed great success with the purchase of See's Candies in 1972. Soon, Berkshire Hathaway invested in several media companies, including the Washington Post and ABC. Today, the company holds significant parts of American Express, Disney, Coca-Cola, and Gillette. It is also a major insurer that includes Geico Corporation in its holding size. As Buffett amassed more money than he could spend in several lifetimes, he confronted the question of what to do with it all. Like many wealthy individuals, he began to think of helping those less fortunate, but Buffett did so with an atypical amount of enthusiasm. In 2010, he founded the Giving Pledge movement to get wealthy people to agree to give 50% of their money to charity causes. Warren then decided that was insufficient and would give away 99% of everything he owned and earned. And just this year, in June, Buffett announced that he was giving away Berkshire Hathaway stock at a value of $5.3 billion to charitable causes. The vast majority, around $1 billion, went to the Gates Foundation, with whom he is very close and used to serve as a trustee on their board. Over the years, the mogul has given the organization a jaw-dropping $43 billion. Warren also created the Susan Thompson Buffett Foundation, which offers scholarships to countless college students in Nebraska. According to Forbes, he has given away $56 billion, making this guy the most generous charity donor in America. When Buffett passes away, he plans to leave 99% of the money he has left over to a charitable trust. It will be overseen by his children, whom he trusts to do good things with the money. Warren explained, "I feel perfect about the values of my 3 children, and I have 100% trust in how they will carry things out." The secret of Buffett's success. Now let's get to what you were waiting for. How did Warren make so much money on the stock market? I know my investments have not brought me untold billions, and I bet yours haven't either. So what can we learn from Buffett? Over 33 years, the value of Berkshire Hathaway stock has increased from $7.60 to around $30,000. It was done through a few simple but effective principles. While Warren has been quite secretive about the stocks he chooses, the mogul has been open about their selection. Buy promising stocks at low prices and hold them very patiently. Also, he says, never rely on wishful thinking. He once wrote to his partners, "This is the cornerstone of our investment philosophy. Never count on making a good sale. Have the purchase price be so attractive that even a mediocre sale gives good results." Warren also advises treating investing like a baseball player looks at pitches, wait for the right pitch to hit, and don't regret good pitches you didn't swing at. Just focus on the next one. The mogul believes you should only make a handful of significant investments in your life, so research them very carefully. If enough of them pan out, you will do fine. In his philosophy, it is better to make a few big plays for companies with excellent fundamentals and value beneath where it realistically should be. That is better than diversifying money on many companies without those strong fundamentals. Doing research involves some tedious legwork. For example, Buffett reads the company's annual reports and considers going back in time. Then, he compares them to how the company has performed in reality. If they seem to have a good plan they are accomplishing, that makes them more likely to invest. If a company's fundamentals are excellent, it can withstand lousy market eventualities and mismanagement. That requires understanding the market and how much competition they will face. As Buffett says, you should invest in a business that even a fool can run because someday a fool will. The philosophy behind this is profound. He believes that good management cannot salvage companies with a bad reputation. Meanwhile, less than ideal personnel will usually not destroy a strong company with an excellent long-term strategy. This is just the tip of the iceberg of what we can learn from Buffett. But no matter how much people try to follow him, they will never be able to replicate that magic that he has. Buffett as a mentor. But there is no sense in having this much information and wisdom unless you are willing to pass it along. Luckily, Buffett does that well, mentoring entire generations of investors, just as Benjamin Graham mentored him. Bill Gates explained how he does it. When Warren explains things, you never feel like you are talking to a know-it-all. When you are with Warren, you can tell how much he loves his work. It comes across in many ways. When he explains stuff, it's never, "Hey, I'm smart about this, and I'm going to impress you." It's more like, "This is so interesting and straightforward. I'll explain it to you, and you'll realize how dumb it was, that it took me a long time to figure it out." And when he shares it with you, using his keen sense of humor to help make the point, it does seem simple. That is why some have described his letters to investors as some of the best investing and economics analyses ever written. Never has there been such a combination of brilliant investor, mentor, and philanthropist in one.